Now to Gary Kaltbaum, Jonathan Hoenig, Steve Moore on the effect Donald Trump is having on all of this. More to the point, the back and forth from Donald Trump as to whether he is giving mixed messages here. Gary, on the tax thing, he has tried to say, I didn't take anything back, I didn't pivot. I talked about maybe having negotiating higher rates on the rich, but higher than the top rate of 25% I'm presently proposing, not higher than the 39.6% that's the standard rate now. What did you make of that clarification?
Well, look, a memo to Donald Trump. Here is his tax plan that is on his website. It is 4 tax rates, highest 25%, and that's what everybody's been counting on. And all I know is Monday, Tuesday, Wednesday, Thursday, Friday, it seems like he's saying something different to different people. And I have news for you. Economy and markets cannot take more of what we've been seeing over the last couple of years. The economy sent in $3 trillion to the government this year, the most ever. They still can't balance the books, and you're sitting at 1% growth with 0% rates, with printing of money, and all that other stuff that's going on with central banks. You keep adding more into Washington and taking out of the private sector, we're going into recession. It needs to stop, and it starts with tax rates. Get them lower. You
know, Jonathan, one of the things I'll take the candidate at his word that this is not a pivot per se, but it does show the danger of a novice candidate coming in, saying something and having to dial it back or clarify. Happens to even the most experienced candidates. But what I think most concerned me about this is the fact that he didn't weigh the import of his words, and the fact that some people would look at that as a sign, even as we show Treasury yields, that you could renegotiate debt with bondholders, knowing full well that could trigger talk, oh, I guess you're for default. He dialed that back to try to clarify his position, but again and again, he seems to be sending mixed messages. Does that concern you?
What does Donald Trump stand for economically, Neil? I mean, is he capitalist? Because traditionally we think of the Republicans as espousing lower taxes, smaller government, less regulation. But in so many cases, as you pointed out, Donald Trump seems to espouse just the opposite. And, you know, this isn't something recent. It was barely a decade ago, I believe, Donald Trump was talking about a one-time 14% surtax on the wealthy to prop up entitlement programs. So I think to Gary Kay's point, that's why a lot of people who invest and are trying to make plans to invest for the future are scratching their heads, because all the uncertainty that the Democrats gave us over Obamacare, over taxes, over regulation seems to be well and alive with the GOP candidate, Donald Trump.
You know, Steve Moore, I know you acted as an advisor in a way to the campaign, and I'm sure you've dealt with, in fact, I've heard you deal with some of the concerns that the candidate is speaking out of both ends of his mouth. You insist he's not.
You know, to my friends Gary and Jonathan, I'd say this, look, stick around. I think you're going to be, and you too, Neil, I think you're going to be very happy with the tax plan that Trump is, I think, sometime in the next few weeks going to come out. It's going to be a revised plan, no question about it. That the highest rate might be a little bit higher than the 25% he promised. Might be, you know, in the 28 to 30% range. But by the way, that's going to be a big reduction from where we are right now at about 42%.
Well, even conservative institutions have said that's going to add $10 trillion to our debt over the next decade.
No,
I don't know who's right, but what do you make of that, and whether he's going to address that?
First of all, I go back to what was said earlier. Look, unless we get growth back, we're not going to do anything to retire this debt or bring down the deficit. I mean, we got to get growth up to 4%, Neil, and we're growing at 1% now. I do think that the tax plan. Look, let me just say this. One of the things that's most important right now in terms of cutting rates is getting the business corporate tax rate down. He takes that rate all the way from 38% all the way down to 15%.
For now.
That's a big deal.
I don't know how long he sticks with that. And by the way, I don't know, and Jonathan, maybe you can help me with this. When he talks about attaining a negotiating stance, assuming if he's elected president, the House and Senate stay Republican, he doesn't have to negotiate this. He can ram it down everyone's throat, much as Barack Obama had the run of the table with all of his big government initiatives. So why is he coming out with a position of saying, I have to give a little bit here? You might not have to give on anything.
Well, and you shouldn't give on principles. Why have a principle, Neil, if you don't stand up for it? And listen, if Trump comes up with a great economic idea,
you want to get it true, right?
Well, do you want to get tariffs through? I mean, honestly, do you want to get redistributive taxes through? If Trump comes up with a good idea, it's only because Steve Moore put it in his ear. And my fear is that he's such a pragmatist, Neil. I mean, this is classic anything goes. Morality, capitalism out the window. If tariffs works, let's try tariffs. If a higher minimum wage works, let's try that. This is not someone who believes, and I think, the capitalist principles that have created the wealth this country now enjoys.
Gary Kaltbaum, what do you make of that?
I have to add something here. Just remember the other side. You have Hillary Clinton on the left that wants to add $1 trillion in taxes onto the economy, out of the economy, into Washington.
So is he better than her? In that regard, is he better than her? At least the alternative is better than that.
His website is much better than her, but his words recently have me worried. I want to hear something that
So even when he clarifies it,
and
Gary, to Steve Moore's point, we all make mistakes. I've made some doozies. Tries to dial it back, says this is what I meant. I know some are saying, smart guys like you, wait a minute, I don't know where your core is. Is that your issue with him?
Yes, and we hear Steve Moore saying that the 25% on his website may go to 28 to 30. So here's what I'd like. Give us the numbers, give us the exacts, and stop moving east, west, north, and south so we know where we stand. We know as business owners where we stand, and we know what we have to compare it against when we come to the election time. We already know where Hillary Clinton is. We want to know where you are.
All right, Steve Moore, one of the things that troubled me more than anything else was this renegotiating debt, because it gave the appearance that he would accept a default, and when he defends it to say this government could print more money or the Fed could print more money, which is technically true, to avoid that, he is really talking about the full faith and credit of the United States government and playing fast and loose with that. I interpreted it no other way.
Yeah, first of all, I agree with what you guys are saying, that one of the things that attracts people to Trump is that he is a non-politician, that he's a businessman, that he doesn't waffle. In fact, it's one of the things that people don't like about Hillary.
But he is waffling. He's all over the map on this stuff.
Exactly. She sticks her finger in the air.
No, he is waffling. He's making her look like Matt Rushmore.
No, that's my point. That's my point. No, look, I'm agreeing with you. I'm saying that's a big problem for Trump if he starts to appear to be a waffler, because then he looks like a politician. Now, on your point of...
Go ahead, I'm sorry.
Okay, on the point about the debt, I don't exactly understand what Donald Trump was talking about, but I will say this.
Well, you better whisper in his ear again.
One very good idea he had, Neil, something that I've advocated for a long time, a lot of good economists. He's right. We should refinance the debt. We should stop issuing so much short.
And by the way,
we should stop issuing short-term debt and lock into 30, 50 years, 2 or 3% interest rates.
I understand. Johnny.
Let me just say one thing. Unfortunately, Steve, a lot of what attracts people to Trump, Steve, in my opinion, is the sanction, is the endorsement of people who should know better, smart economists like yourself. So who's going to be around to save capitalism, to protect capitalism when the economy fails?
Treasury Secretary Steve Moore,
we tried capitalism under Trump. We tried it under Trump and it failed. So what do we try now?
All right.
Yeah, Jonathan, I don't want to see a 46% capital gains rate. I don't want a doubling down of, Obamacare, all the things that Hillary would do. I mean, she's talking about massive new spending. I mean, I do think there's going to be sharp distinctions here between Hillary and Trump. Yeah.
For everybody whining that tax cuts are going to starve the government, I have one word: yay! That's the place we need to go. Government's getting too big.
I like the yay thing. A little more enthusiasm next time, though. Like, yay! Not like, yay. All right, guys, thank you all very, very much.